Dave, we've been talking a lot about dynamic investing, dynamic strategies for years now, but very relevant over the first half of the year, and just how quickly investors had to change tact from, a pace of rate increases to rapid increases, and now the situation perhaps with stagflation or even a recession. It feels like there are more twists and turns ahead. And if I can just take you to the sectors then, because it feels that investors have been trying to position on markets by taking bets off, but also rotating by sectors. And if you look at the slump we saw in FANG plus stocks to the tune of 43+% versus about 20% stripped off the banks. What do you think rotation will look like in the second half of this year based on these twists and turns we still have ahead?
Well, we have seen a lot of the tech stocks come off, and you talked about the FANG stocks, and that's something that those are the ones that we've seen the biggest gains in. The stocks that seem to be best, in my opinion, are stocks in commodities and, the things that people need to have every day, the necessities, the, healthcare, anything to do with, food and, clothing and things like that. Housing, I'm not quite sure on that one. That one's kind of up in the air because with the way interest rates are going, that's a long-term big investment. So even though that is a kind of a stable thing, I think that we're going to see some, a little bit of withdrawal in the housing market. I think you have to with the way interest rates are going because prices are just going way up. But I would stick with more staples.